A lot to cover today. Gold and silver are rallying. We got the Magnificent Seven having a recovery in May. We got interest rate and inflation talks happening, and we got the return of the meme or Reddit stocks making a reappearance in May's rally. So let's talk about things. Let's jump right into it and get on with today's update. Hello, everyone. As always, my name is Michael LeBlanc, and welcome to the Tactical Portfolio Update for the month of May. Remember, everything that we cover in these videos are for information purposes only. Make sure you do your own due diligence, or better yet, feel free to reach out to us. We'll do a free portfolio evaluation and give you our second opinion. Also wanted to make sure I shouted out to our team members, Harold and Julian, who released a couple of really great videos this month. I'll give you some more information on those at the end of this video, but make sure you go check those out. So let's talk about what's going on in the month of May in the tactical portfolio. We've having a great rally in the markets, but in the portfolios are really taking off this month, as opposed to, if you remember, last month in April. We saw a little bit of a pullback in the portfolios, not much, certainly not near kind of the market movements, but we've seen that recover and then some for May. So we're really happy around that. A lot of that has been outside of the Magnificent Seven, because if you remember, we reduced our exposures to those at the beginning of April, concerned about a bit of a pullback in those. We did see that in April where they had a bit of a sell-off. They have rallied a bit in May, but our portfolios is made up for that, and other names that we'll talk about. And we've also seen the big movement in gold and silver. So this month has been really strong around the mining stocks, and in those particular commodities in particular. We're not big gold bugs. We do have one on our team. If you ever need to talk about where gold or the mining industry is going, Julian Godo on our team is happy to talk to you about an area of passion of his. We do have exposures in the portfolio, and not to hit the analogy on the head with a pickaxe, but as I mentioned previously, rather than going after commodities in the portfolios, we prefer to look at the service side. So rather than buying the gold, we buy the company that makes the pickaxes, where they're going to sell more and more services into those markets, rather than owning the names themselves. So we do have exposures there, which are doing exceptionally well this month. And we expect that to continue a little bit longer. Energy's still doing really well. That's been a kind of a broad call in the market that energy will hold pretty strong here. We do have energy exposure to the traditional, the oil companies, but we also have a really great exposure that's done fantastic in the portfolio in the uranium sector. In fact, we took some profit from our position a couple of months ago. We bought back in as it pulled back, and it started to rally again this month. So we're starting, really seeing some traction on the uranium exposures in the portfolio, and expect to continue to see that running. We do monitor the hedge funds a lot, looking at what they're doing, and they started in the month of May to cut some of their exposures to the Magnificent Seven. And if you're not familiar, Magnificent Seven, of course, is the tech stocks, your Facebook, your Nvidia, your Amazon, your Googles. They started moving that money into utilities and specifically industrials and power companies, as they see those companies will benefit from more from this AI boom that we're seeing, or at least the interest in the AI technology. Those areas, the utility companies and the power companies and the industrials, have been a favorite of ours since earlier in this year. So we've got great exposures in the portfolio. In fact, we've got a really good covered call strategy in there that's yielding off just around the 9% mark at our entry point. Plus, we have the underlying equity exposure for the upside. So we're a little bit ahead of them on those exposures. But we always keep an eye on what they're doing. As I mentioned, rate cuts and inflation talks have been happening. We don't expect to see that rate cut coming in June. I know there's still some part of the market is hoping for it. Inflation in Canada particularly was down to 2.7, right around where it was expected to drop to. which is a good trend, but still 2.7, just below the 3% target rate. Still not a big buffer for them to really start doing cuts. So the last thing they want to do is do a rate cut and then reinflate the market and have to do a rate hike again, because that could stall things seriously. They want to make sure they got a decent buffer room. I don't think they're going to look at that until they break through 2.6 or lower. And also, as we mentioned in previous videos, Canada's got that double-edged sword, because we've got inflation that we're fighting, but we also have the key, if we cut rates against what the US does, we could affect the Canadian dollar, and that really affects our exports a lot. And the Bank of Canada's got to be really, really cautious about that. So, there's this fine balancing act that they're doing. Unemployment, as always mentioned, is a big, big number in there. But both the inflation number and the unemployment number that the Bank of Canada work on, they're standard numbers. They are very backwards looking. We could do a whole video as to why they're wrong. But that being said, that's what they work with. Unemployment numbers are still higher than what they'd like, but we track alternative data sources that give us more daily updates, or certainly weekly updates, as to where unemployment are, and we are seeing that chart fall. So the listings fall, meaning the unemployment rates going up. So we should see that trend play out in the backwards looking numbers that the Bank of Canada use in the next month or so. So that will give them all ammunition to start looking at those rate cuts. Hopefully fall, but probably not for the summer months. They want to build this buffer to avoid reinflation as things move around. Of course, we've got to talk about the meme stocks, or if you remember, the GameStop and AMC theaters. A couple of years ago when we went the Reddit members who rallied up GameStop. We saw a resurgence in it, very temporary, didn't really last that long, only just a couple of days, but it had a massive rally from about $15 to just $60. It's fallen back now to, last I looked, was just around the $20 mark. So we don't know if it's got the legs or the trajectory it had in the previous rally. Not that we played either rally. This is strictly driven by volume. There's no financial analysis done into these things. So we like to watch it. It's entertaining to watch. We're not playing it, and we'll keep an eye on see what's moving on in that area. Also, just wanted to mention, of course, we're always talking about our tactical portfolios in these updates. We do have other portfolios. Of course, I've mentioned before, we have our all cap portfolio, uses our same process-driven asset allocation and stock selection process as we do in the tactical. It's just a little bit more momentum oriented. It's driving for higher growth, a little bit more volatility, but it still uses that risk first approach to kind of protect on the downside. But it will have a little bit more volatility. We can't talk about the numbers yet out of that portfolio until it's hit its 1-year anniversary, which will be at the beginning of September, and we'll have more information on that portfolio for you as well. And as always, remember, our team also works on a process-driven portfolio around growth small cap companies. My business partner, Harold and Julian are active in that portfolio. As I mentioned, they put a couple of great videos out this month. One with Donville Kent, who's a small cap fund manager here locally. It's a great discussion that they have. The other one's about one of the names in our small cap portfolio. If you ever want more information about growth, small cap growth with great trajectories, feel free, always reach out to us. Both Harold and Julian are happy to discuss any of that with you. And as I mentioned about the gold and silver names, Julian's always happy to talk to you about mining and where that's going. He always has a great opinion, and he knows most of the names and players in that. So with that, thank you for watching today's video. We will do our next month update. We're going to have a couple other videos before then, just on some of the individual small cap names. And we're also going to be talking about some private debt. So if you own private debt, you're going to want to follow, subscribe to our channel, like the video. You'll get updates on as future content come out. Let us know if there's a particular topic that you want us to cover. But as always, reach out to us. There's an email below. You can go on mikeonmoney.com. You can find us there. We're happy to review your portfolios and give you a free evaluation. Thank you again for tuning in. Talk to you soon.